Welcome back, everyone, to Tech Tune-Up. I'm your host, Paul Meeks. It is February 25, 2025, and we're brought together through Harvest Portfolio Management. I'm here in my dojo in Charleston, South Carolina. We're super easy to be found, and also with my friends at Benzinga here on their YouTube channel. So, we try to go through the news, try to be predictive, always try to be value added, and not only review some of the key news items of the week, but also explain how they can be telling to other parts of tech investing and even beyond. At the end of the program, as I always do, I'm happy to take your questions, but I also say, as maybe a special treat to at least one of our viewers who reached out, which I'm always cool to hear from people, and asked me to look into a company, and I have, and I'll talk about that in the Q&A period. How cool is that? So let's get to it with what I like to call the stock tells of the week. Obviously, tomorrow is a big, big day. It is game day because Nvidia will be announcing its Q4 fiscal 25 earnings, probably give guidance for Q1, and maybe even give guidance for the entire next fiscal year. Now, you should know that Nvidia has a January 31 fiscal year. So here we are actually in the first quarter of fiscal 26, since we're into February 2025. I don't expect a lot of trouble, at least with what Wall Street is expecting on the top and bottom line. However, I must say, I'm a little bit not long-term worried, but short-term worried about any manufacturing glitch with the Blackwell chip ramp. And what I would do is this. The options markets are telling us that when Nvidia reports tomorrow night, their stock will immediately go up 10% or down 10%. And if there is at least talk of a manufacturing issue, and if it appears to be temporary, which I am 100% sure that it will be, and that stock goes down 10% or even more, this is your buying opportunity in Nvidia. Because if it's limited to a short-term supply problem, that's cool, that's temporary. The only thing I worry about is a slowdown on the demand side. And I don't think we've had any evidence of that, because despite the DeepSeek AI threat from China that rattled some cages a few weeks ago, all of the key US hyperscalers have confirmed their capital expenditures on AI data centers for the year. Actually, as a group, they raised them significantly from 24 to 25. As far as their forecast, the only one that seems a little bit squirrely, and I talked about this company a couple weeks ago when they announced their earnings, is I'm getting an uncomfortable feeling with Microsoft. They're now starting to talk to investors in cryptic code. What is going on? Their latest that dovetails with Nvidia is, yes, they will confirm that they will spend $80 billion for their fiscal year ended June 30th of 2025. However, they're now saying that the pieces of the puzzle, even including AI gear, within that broader mix, those pieces have shifted around a little bit. I don't know what they're saying. I've been covering Microsoft since they went public in the mid-'80s. This is some double talk, and as I've said, some cryptic messaging. So I'm a little bit queasy about Microsoft. I've actually sold it in some of my tech portfolios, or at least reduced my position. The next I want to hit on is Analog Devices. Not a stock that I've owned or have recommended for some time, even though it's a quality company. This is an analog and mixed single chip company. Like Microchip is another one. Texas Instruments is another one. Think about chips that mostly go into industrial applications. Think, for example, automobiles. So after having a horrible run the last year or so because of a inventory correction, too many of their chips in the channel, not enough sell-through, they finally had a quarter where they surprised positively, like they used to do many years ago. And they talked about a drawdown in inventory at their house and their customers' houses, which would be really good for this industry. So there could be a play here. Finally, I don't want to call it an obvious play, but maybe some green shoots. And how do we play that? ADI, Texas Instruments, NXPI, Microchip, and a few other names. So stay tuned. I think the next item is interesting. Is Alibaba back? Remember, Alibaba a few years ago was one of the largest, when they listed in the United States, tech IPOs of all time. And it was the king of kings. And Jack Ma, its founder and CEO, an absolute global rock star. But then they went in the doldrums. They actually had a pretty nice quarter. They are going to be doing some AI biz with Apple, which is probably more important for Apple than anybody else. And it looks like the company and some of the other leaders of tech companies in China are starting to see some love from Chinese leader Xi Jinping, which could be, because at the end of the day, if the People's Communist Party in China doesn't like you, you're screwed. Doesn't matter what business you're in if you participate in that country. So anyway, I'm keeping my eye on. I know I've missed some of it, but Alibaba has come back down in recent days. If I'm going to go there, I'd probably go with Alibaba because I think as it pertains to the AI driver, they're probably the most progressive, the most advanced versus the other large cap tech stocks in China. Tomorrow night, I'm going to be looking very closely at the results of Snowflake. Talked about this last week. Snowflake has started to intrigue me, a little momentum off the bottom. The stock had been crap for about a year. So we'll see what happens, see if they confirm guidance. I am chomping at the bit to buy some of these momentum stocks that have been crucified the last couple of trading sessions, not because the fundamentals have changed, but just because it seems that the momentum or risk on trade is now risk off. However, Palantir is a company I admire more now because they are a broader based business with corporate customers, not just spy agencies in the US government. But this stock had gotten so expensive. Even if it comes down a lot from here, I'm still not interested in buying it. Way too expensive. The one that I want to buy when we finally get stabilization in this momentum trade is AppLovin, not Palantir, AppLovin. Next, Apple, all kinds of announcements. This is kind of interesting that they rushed to make an announcement. $500 billion they plan to spend for data servers in the Houston, Texas area over the next several years. And that should also bring 20,000 employees. Why are they doing this? Here's a company that generates so much free cash flow because they don't have capital expenditures. All their stuff is manufactured abroad, particularly in some of those countries, as you know, China and Taiwan, and now a little bit more in India. So I think this is what's going on here. They don't want to change their business model. They're a design house. The reason they're doing this is they are one of the US tech companies that would get clobbered the most by Trump's tariffs. And so they're trying to appease the boss and maybe get some kind of exception from the White House on the damage to tariffs. Because if the current tariffs go through as planned, it should be a pretty easy 10% hit to the earnings per share of Apple. That's a pretty big impact. I'm also going to be watching Dell. Believe they report tomorrow night. You know, the guys that are the kingpins, at least in the United States, of AI servers are Dell, Hewlett-Packard Enterprise, and Supermicro. Supermicro is actually kind of interesting because today is the day, February 25, where all of their back SEC filings, which includes one 10K and two 10Qs, are due to the feds. And if they don't get them in today, they could be delisted. Here we are. It's the noon hour. I haven't heard anything. We'll see. But as far as the fundamentals for the business go, I want to hear what Dell says. I wouldn't step in on Dell before that announcement, but let's see what happens. I'll be on that quarterly call tomorrow night. I mentioned SMCI. I'm interested in their fundamentals. I'm interested in their big next fiscal year revenue guidance. However, I just can't go forward. I used to be in the stock in a big way, did really well with it, but I can't go forward now until we resolve the financial accounting scandal, and those SE filings are due today. I am happy to see that there still is pretty aggressive spending on AI in the private markets. Anthropic, which has the Claude chatbot, has just raised about $3 billion, which is a pretty big raise. And the valuation of that privately held company in the most recent round is now up to about $62 billion. So that is a pretty good sign. I have said in the past, and I'll say it again, the private company in this space to look out for that I actually think will be an IPO in the next couple of months is CoreWeave. And to be honest with you, I'm in it as a private investor. Microsoft, I mentioned, just weird going on there. I got to stay away from it. Even last year, I believe the stock was up 11%. The S&P 500 is up 25%, and the rest of the Mag 7 up even higher than that. So it has been not a money loser. You don't lose money on the investment, but it has been a laggard. And I think the story there is just getting more muddled with all their weird commentary. So stay tuned. Last week, I previewed the quarters of Arista Networks and Cadence. They've reported those quarters, and I'm back to say, stay away from Cadence, stay away from Synopsys, stay away from all of the stocks in EDA software, electronic design automation. But I will tell you, even though Arista Networks has been smacked since its report, I thought the results were pretty clean. I think that they're guilty of only one thing, really. It has been a momentum trade, which is now broken for all the momentum stocks in the market because their fundamentals, their report, and their guidance were all pretty good. Stock had just gotten ahead of itself. So I haven't been in Arista Networks for a while, even though I had liked it, and I had sold it a while ago just purely based on overvaluation. You know what? I might come back to Arista Networks, but please, no more Cadence, no more Synopsys. Next, I also previewed last week Booking.com. I will tell you, I'm feeling very comfortable with the OTAs. These are the online travel agencies. And I would probably buy, as a diversifier away from the same old tech, I'd probably buy both Booking.com and Expedia. They both had nice quarters and guidance. So the last thing I'd like to mention is the stock that's on my radar is as we build out these AI data centers, which looks like the pace will accelerate, not decelerate, at least in 2025. We know that they have a voracious demand for power. And I think despite all the chatter about nuclear, although I do like Constellation Energy Group, that the key power source, at least for the time being, next couple of years, is going to be nat gas. And I particularly like EQT as a play in nat gas. Again, I do like the one nuclear play, Constellation Energy Group. And one of the reasons I like it is, yes, it has the nuclear turn on the power kicker for AI data centers and the relationship with Microsoft. But I really like the accretion, the immediate accretion of their merger with Calpine. That should be nice. And I imagine that the Trump administration will not thwart that deal. So we'll see. But think about EQT as kind of an indirect way, as I like to find from time to time, to play the power demands for these AI data centers. So next, let's get into my picks and pans on the stock side. I don't want to blow up your heads here with all these colors, but you do know that yellow means wait, hold. Green is a fresh money buy, and red is, and I do put up the reds when I'm proven wrong. I try to escape stocks quickly, assuming a small loss before it becomes a big loss. Those would be in red. And I did that recently with PayPal, as you may recall. But, I've mentioned the stocks that I think are a bit squirrely for all their own reasons. And if it's not technically, as far as the price chart, if it's could be fundamentally, and it could be both. Like Microsoft is an example of one that I've turned south on because technically the price chart looks like shit. And fundamentally, I'm not getting the answers, the clarity that I need from them. So we'll see what happens. Obviously, the big news will be what I like to call game day, which is every quarter when Nvidia announces their earnings, and it a coming tomorrow night. So take a look at the list. I guess the other stock that I should have in there, which I don't, and I would put it in the holding pen, which I just mentioned, is Constellation Energy. It's come down a lot because it has been a momentum play with the nuclear focus, but I do like the deal with Calpine. And when the stock stops going down, it's not a fundamental call. It's just tell me when these momentum stocks are going to finally hold, then I probably pick up some CEG. The other one that I should talk about that I noticed today is down a lot, and it still might be a short here because it has been exposed, is Tempest AI, the former Tempest Labs. This is a company that is trying to blend two of the greatest catchphrases of all time, AI and healthcare. This is kind of interesting because this company had actually been around for quite a while. I think it was founded in 14 or 15, but it changed its name from Tempest Labs to Tempest AI in January of 23. And that was about a month after OpenAI introduced ChatGPT. So this is a play to capture the hearts and minds of AI investors. The company is losing a lot of money. This still might be because it's breaking down on today's news, which was bad. Some key technical support areas. I might actually poke my head in there, keep an eye on it, and either not today, but in the near future, short some ticker symbol TEM, Tempest AI. So let's move on to the tech trends. We have quite a few today. Technology stocks are absolutely driven by not just microeconomic factors that only pertain to them, but big picture macroeconomic factors. So I'm always looking for rates. And if you're a interest rate watcher, you better be watching the Federal Reserve Board. So it looks like there will be no change in the Fed funds benchmark rate when they meet next on the 19th of March. I told you last week that Trump and Treasury Secretary Scott Bessent have pivoted and said they're not going to squeeze Jay Powell and company over at the Fed on short-term rate decisions, but they want to focus on lowering what I call in my classroom at the Citadel, America's risk-free rate, which is the yield today on the 10-year Treasury note. If you're keeping score, it's 4.3% today. I think stocks are a buy as long as that rate stays below 4.5. I think stocks are a sell, particularly aggressive growth stocks, if we have a lifting in that rate. And if it eclipses 5.0%, we could see some blood. So that's why I always talk about it. I could talk about semiconductors all the time, but this is a big, big factor. The next thing I want to hit is, I already talked about Anthropic, but Anthropic and XAI and even OpenAI themselves and CoreWeave, this private company that I favor that should be going public soon, they've all been raising gobs and gobs of money. And that's good for them. But it tells you that the brightest, or maybe they claim to be the brightest, in Silicon Valley, particularly with these privately held firms, are still believing in the AI infrastructure trade, which is mostly focused on semiconductors and particularly Nvidia and its ecosystem. So I still think that's a pretty good confirmation. So another day, another strategy, another tactic from Trump and company. And it looks like, he is going to turn the screws again on the Chinese. And that is going to impact the sale of semiconductors in both directions. So we'll see what happens. But this could be a threat to Nvidia. They might have a little chatter about this on the call, though Apple is a company I just mentioned. If the tariffs go through as planned, even if they're not increased from current proposed levels, Apple's going to have a 10% hit in their earnings per share. And that'll be particularly significant for Apple because until AI takes off and makes you want to upgrade your iPhone or your MacBook Air, this company hasn't grown in about 4 or 5 years. And it squeezes a lot of earnings per share growth to satisfy Wall Street by just simply buying back their stock. And if you carve already slow EPS growth and you take another 10% out of that for the tariff hit, going to be some trouble. And that's why Tim Cook, the CEO, and everybody is pushing hard to make this announcement about the expenditures for manufacturing, which is very unlike Apple in Houston, Texas, again, to appease Trump, make it here in America, and hopefully get some relief, some exceptions from the White House for those tariffs. It'll be interesting, and Apple is probably the most obvious, at least from what I can see, impact, and I've quantified that EPS hit. The next thing is it'll be very interesting to see, and I think we've had some early signs of some companies that have been so threatened by AI, even though it hasn't really been fully unveiled, that they're already in the shitter. Here's a great example. I'm an academic, and the last couple of years, my students, unless I catch them, have been heavily using Chegg, which is a online tutorial. Sometimes I find the questions on my exams on their website. So it's not a tutorial, guys. It's a way to cheat. But anyway, this company had been all the rage. Students loved it. Hot stock, a lot of talk. However, now the company appears very close to bankruptcy, and they are suing Google because when Google, through its AI software, gives you a search result that doesn't have links, but it gives you that AI generated summary at the top of the page. That is, in many cases, with many companies who depend on the click on to their own content, to their own site. If you disintermediate them with these AI generated summaries, their business is dead. And so Chegg looks like it's going to go bankrupt. This looks like a catalyst as to how quickly they'll go bankrupt. And this won't be the only company. We're now starting to see, just like we did when the internet bubble popped, some companies will be benefited from AI and some companies will be taken to the woodshed, like Chegg. There's some mixed economic signals. We've had in the last week or so some very strong and scary inflation numbers. On the other hand, we've had 2 consumer sentiment surveys which showed that people had a bleak outlook. So what do we got? A slowdown of the economy? High inflation? This is going to make it very difficult for the Fed to consistently, with confidence, start to lower interest rates. A weaker economy, poor customer sentiment, that would tell you that the economy is slowing. But on the other hand, they cannot allow inflation to reemerge. So this is going to be very difficult. And unfortunately, reading these macro tea leaves is going to be important. And the message is truly mixed. So the other thing I think is interesting is we all knew that with Trump 2.0, that crypto would get a bump, right? Trump nominated the head of the SEC, Securities and Exchange Commission, to be a crypto zealot, unlike his predecessor, which was a crypto cop. We'll see. But even Coinbase, in which the feds had an ongoing investigation, that's been dropped. And even the investigation against the Chinese-backed, Chinese-founded Binance has also been dropped by the feds. This is a real shot in the arm for crypto. And wow, it looks like these guys are going to go, for better or for worse, unregulated in the new regime. So the last thing I should probably say before we get to the questions and my little overview that I've prepared for a question I got about a stock from a viewer last week is the unwinding of this momentum trade. When we unwind or continue to unwind, because it's continuing today, there are going to be some great opportunities. I have highlighted Constellation Energy Group, and I've highlighted AppLovin, and I've said no at almost any price because it's so damn expensive even now to Palantir. So these are not buys based on fundamentals. I've already solved that riddle. The time that you step in is when you see the stock flatten, right? We see looks like a trough for several days in the name on low trading volume. So it looks like the selling pressure has dried up. Maybe a nice hold on some key technical indicators like the 20-day moving average or the 50-day moving average or the 200-day moving average. I'm looking for all those things, but I just cannot go against the grain and buy falling knives. Like I'd love to own some AppLovin here, but it's down a lot again today. So anyway, we're having a unwinding of the momentum trade. It will bring some great buying opportunities, and the research, the buying, the trade is dependent on technical analysis, not fundamental analysis, because we've already highlighted the ones that are on my I love their fundamentals list. So anyway, those are tech trends. Prepare your questions, shoot them at me. And once we get through those, I'll give you a little bit of a story that a viewer has asked me to look into. Paul, weren't you long T-Mobile? Yes, I was. Did I not have that on the sheet? Yeah, I still own T-Mobile. And if somebody invested through Harvest Portfolio Management in my tech model today, I would buy that. That would be green. I would buy it with fresh capital. I really like the fact that despite all the controversy years ago when they merged with Sprint, and Sprint was a bag of shit, they did pick up some really cheap spectrum, give some great capacity. And also as we go to fiber to the home, and these companies are aggressively going after the cable companies like Comcast with wireless broadband in your home. T-Mus or T-Mobile seems to be better positioned in that regard than either AT&T or Verizon. So yes, sometimes when the stock has a run, I pare back my position just based on valuation, but I am a T-Mobile fan. Any thoughts on Applied Digital? Nvidia has an 8% stake in the company. Stake with a S-T-A-K-E, not steak like you eat. Yeah, I think it should be fine. I think it's also part of this unwinding, no real fault of its own of the momentum trade. So let's see what Nvidia says tomorrow night. But the fact that Nvidia, with Jensen Huang, their founder and CEO, probably the smartest tech dude on planet Earth, if they have built a significant stake in the company, which they have, he's telling you that it's legit. I trust him implicitly. So I'd take a look at the stock chart. I'd take a look at the fundamentals. I can do that between now and next week if you like. Just shoot me a message. But those are my initial thoughts. Any thoughts on UPST from Keith Evans? Keith, I could always follow up on it for you, but unfortunately, nothing fresh on that particular name. I haven't been in it for quite a while. All right, guys, before we close up shop for the day, and I'll be coming back to you hard next week with all these updates. Well, here's one more from Izzy. Disney. I don't know, man. I think Disney's okay, but if I ever want to play video streaming, which obviously it's not where the puck is going, it's where the puck went, I typically just hold my nose and buy more Netflix. That's always been the right thing to do. I think Disney's okay because it does have some attributes. So I prefer it over some of these beleaguered companies like Warner Brothers Discovery, and Comcast. But I would put Disney second fiddle in this entire media space to Netflix. So last week, I offered, somebody asked, and I'm delivering today. A viewer asked me to take a look at a company called Nebius Group. The ticker symbol is NBIS. And it's a company that's under the radar because I think only two analysts on the street cover it. It is a company based in Netherlands. And they claim, even though it looks like a cobbled together group of companies that they bought, that they offer, and this is a wonderful thing, whether it's bullshit or not, to say to analysts like me, we have a full stack of AI infrastructure, or all the hardware, all the software, all the data networking connections. We'll see. I would tell you this. The stock has popped, even though it has a very short trading history. And as a foreign company listed on a U.S. exchange, it does issue at least short-term or short-form reports to the SEC, but they're not going to be writing and submitting and filing U.S. company like 10Qs and 10Ks. 10Qs is a quarterly report mandated by the SEC. 10K is the annual report. The company last year, revenues of $118 million, but they lost a shitload. Their adjusted EBITDA was a loss of $266 million. And their net loss from continued operations, which is probably a better network, because sometimes these adjusted EBITDA numbers can be bullshit. They lost $400 million. So revenues of $120 million, loss of $400 million. So obviously you have to believe that they are going to accelerate their revenues considerably, and they're going to go from steep losses to break even to profitability. Now they claim that they are going to have a big year. They just raised $700 million at the end of December. Nvidia was one of the investors in that particular offering. And remember what I just said about Jensen Huang and Nvidia. Those dudes are smart. And so where they invest, I want to go too. But I would tell you, I don't cover this company that closely, but they're claiming that by December of this year, that their annual recurring revenue is going to be somewhere between $750 million and $1 billion. And remember, their reported revenue just last year, only $118 million. So we'll see. That is a promise for unbelievable revenue growth. And if it's legit, the stock could go higher. But remember, if you're going to build AI infrastructure, your capital expenditures are also going to be very, very heavy. They now have over $2 billion on their balance sheet. They don't have much debt per se, but here is a capital-intensive company that is burning a ton of cash, and it gets only worse with their very heavy capital expenditures. That won't be going away. They're going to have to spend more to, essentially go on the radar from off. And so I say it would come down to how much do you trust this management team to deliver on this unbelievably strong, unbelievably fast revenue growth this year. Because if I didn't know them, I'd say, holy shit, dude, that is aggressive. So I can start to follow this company, but you know what I do? I believe it when I see it, when I see some kind of really aggressive guidance, particularly from a management team I haven't met yet, and I haven't met them yet. Quite often, I do know the management teams of the company I invest. But I would tell you this, particularly since it's come down, and particularly on Friday, if Nvidia has a poor short-term report tomorrow night, you could get Nvidia at a less than 30 PE multiple. Why would you buy this company at its insane valuation when you could perhaps on Friday morning, if there's any disappointment with Nvidia's fundamentals, that you could be in a situation where you can buy Nvidia for 25, 26 times earnings? Just do that. In tech, even following the emerging companies, whether they're US or from abroad, is always cool. It's interesting. Everybody always wants to find the needle in the haystack, you know, the next Nvidia, when it's actually just a company that's still in somebody's garage under R&D. But I would tell you, in technology, in my experience, I've been doing this a long time, is spend most of your time, let's do the 80-20 rule. 80% of your time should be focused on tech leaders and 20% of your time on tech challengers. So the spending for AI infrastructure is so significant. It's going to be like the same old gorillas are going to rule the jungle, right? Because it's going to be Amazon and Meta and Microsoft and Alphabet. Why? Because they have the money to spend in this AI nuclear arms race. So you know what? I'd rather see you buy Nvidia potentially Friday morning at 25, 26, 27 times earnings than this company. So with that, everybody, this is an example of you send me a message, I'm easily found, want me to look into something, I come right at it. And I will see you with a follow-on to all these things I've led into today when we get back together next Tuesday.